Are you ready to dive into the Economic Crime and Corporate Transparency Act of 2023? This landmark legislation represents the most significant overhaul of UK economic crime law in a generation. Discover how it aims to reshape the landscape of corporate accountability and anti-money laundering. The Economic Crime and Corporate Transparency Act 2023 is a sweeping reform of UK corporate law. It enhances economic crime enforcement and anti-money laundering powers. Passed in October 2023, it follows the Economic Crime Act of 2022. Together, they mark the most significant tightening of UK economic crime law since 2002. This new legislation aims to close loopholes and increase corporate accountability. Decades of concern have highlighted the UK as a target for dirty money. The Panama, Paradise, and Pandora Papers exposed the misuse of UK corporate structures. Russia's invasion of Ukraine accelerated calls for action. The Law Commission's 2022 paper underscored gaps in corporate accountability. Parliamentary reports criticized Companies House for being too passive. The Act aims to fight dirty money and close loopholes used by criminals. It enhances corporate accountability, making it easier to prosecute companies. New enforcement powers are introduced to seize crypto assets. The Act strengthens information sharing and compels disclosure. These measures collectively aim to tackle economic crime effectively. The Act has four main policy aims. It reforms Companies House to be an active gatekeeper. It strengthens transparency of UK companies and legal entities. It prevents the abuse of corporate structures for economic crime. Lastly, it tackles economic crime through new offenses and enhanced asset recovery powers. The Act introduces new obligations for identity verification. It imposes stronger checks when forming UK companies. The new FTPF offense targets large organizations. Wider information sharing with law enforcement is encouraged. These changes aim to boost confidence in the UK corporate register. Companies House is transformed into an active gatekeeper. Mandatory identity verification for directors is introduced. The power to reject suspicious filings is strengthened. Streamlined information sharing with law enforcement is enabled. These reforms aim to prevent misleading or fraudulent activities. All company directors must verify their identity with Companies House. Verification can be done directly or via an ACSP. Failure to verify is a criminal offense. Companies House can reject filings from unverified individuals. A phased rollout is expected through 2025 and 2026. Limited partnerships face tighter regulations to prevent abuse. A UK connection is now required for registration. Annual confirmation statements are mandatory for all LPs. Companies House can strike off inactive or dissolved LPs. These changes close loopholes in European laundering typologies. The Act aims to increase transparency of UK entities. Companies House is turned into an active regulator. It prevents misuse of corporate structures for crime. Enforcement powers are modernized, especially for crypto assets. Safe harbors are created for AML intelligence sharing. Companies must confirm lawful activities in annual statements. Directors must verify their identity once. Beneficial ownership information is made transparent. Restrictions on corporate directors are introduced. Companies House can investigate register inconsistencies. New offenses for false statements to Companies House are created. Directors can be disqualified for persistent failures. Fines are imposed for non-compliance with ID verification. Faster procedures for striking off fraudulent companies are introduced. Extended powers for obtaining information from firms are granted. The Act includes ID verification for directors and PSCs. It strengthens filing requirements and powers to query filings. Confidentiality provisions for sensitive data are ensured. The register of overseas entities is extended. new offenses and crypto asset seizure powers are introduced. The Act extends asset recovery powers to crypto assets. New powers to freeze and forfeit crypto assets are introduced. Crypto wallets can be seized like cash. Law enforcement can convert seized crypto to GBP. The regime applies to all crypto assets, including stablecoins and NFTs. The Act creates safe harbors for information sharing. Regulated businesses can share information to prevent crime. Firms are not liable for breaches within the safe harbor. UK GDPR compatibility is ensured by statutory provision. These measures aid intelligence sharing on fraud patterns. The FTPF offense targets large organizations. It applies if an associated person commits a specified fraud offense. The offense mirrors the Bribery Act 7 corporate offense. It extends the failure to prevent model to fraud generally. The FTPF offense came into force in September 2025. An associated person commits a specified fraud offense. The fraud benefits the organization or its services. The offense applies to employees, agents, and subsidiaries. The organization must have reasonable prevention procedures. Without such procedures, the organization is liable. The offense applies to large organizations. It covers companies, partnerships, and LLPs. Both UK and overseas entities are included. Subsidiaries meeting the threshold are also caught. Public sector bodies are generally excluded. The defense requires proof of reasonable prevention procedures. Procedures must be proportionate and risk-based. They should be actively applied, not just paper policies. The defense mirrors the Bribery Act S7 approach. Prevention procedures are key to avoiding liability. This is the conclusion of the video. The Economic Crime and Corporate Transparency Act 2023 is a transformative piece of legislation. It aims to enhance transparency, accountability, and enforcement in the UK. With its comprehensive reforms, the Act seeks to curb economic crime effectively. You can reach us on WhatsApp at 074-843-61688 for any queries. A team member will be happy to help. Thank you, and see you at the following session.